Listen, if you're over 60, have a green card, or file taxes in America, the IRS just dropped a rule in 2026 that could cost you thousands in penalties, trigger an audit, or worse, mess with your immigration status. I'm Henry Charles with US News 24, and I need you to stay with me because what I'm about to break down could literally save your life financially. Here's the thing. Tax season is already stressful. You work hard, you pay what you owe, you follow the rules, and then the IRS changes something without warning. But for immigrants, it's even more complicated because your tax history can affect your green card, your citizenship application, everything. When you hear there's a new rule targeting you specifically, your first instinct is panic. I get it. But here's what I need you to know right now. This isn't about fear. This is about preparation. If you understand this rule and take the steps I'm about to share, you're going to be completely fine. So let's get into it. The IRS just finalized a new filing requirement that hits in 2026, meaning it applies to tax returns you file in early 2027. This wasn't random. The Treasury Department admitted there's a massive compliance gap with seniors and immigrants when it comes to reporting foreign accounts. The Wall Street Journal reported it, Reuters covered it, Associated Press too, and the full details are on the IRS website right now. Here's what you need to know in plain language. Starting in 2026, if you're 60 or older, or you're not a natural-born U.S. citizen, that means green card holders, naturalized citizens, visa holders, you now have to answer expanded questions on your standard 1040 tax form. These questions are about foreign bank accounts, foreign pensions, foreign Social Security benefits, and international money transfers. These used to be optional or only on specialized forms. Now they're mandatory, non-negotiable. But here's where it gets serious. The thresholds for reporting just dropped. Under the old rules, you had to file Form 8938 if your foreign assets hit $50,000 at year-end or $75,000 at any point during the year. The new rule cuts that in half. Now you're looking at $25,000 at year-end or $40,000 at any point in the year, meaning if you have a bank account, pension, investment, or property overseas worth more than 25 grand, you've got to report it on Form 8938, even if you were safe before. The FBAR, the Foreign Bank Account Report, is still separate. You still file it with the Financial Crimes Enforcement Network electronically. The $10,000 threshold hasn't changed there. But here's the new part, and this is critical. The IRS is now cross-referencing your 1040 answers, Form 8938, and your FBAR records automatically. If something doesn't match up, if you say yes to foreign accounts on your 1040 but don't file an FBAR, the IRS generates a notice automatically, and that notice gets flagged for audit. Why are seniors and immigrants being targeted? Because statistically, you represent the largest source of unintentional noncompliance. A lot of seniors retired abroad, or they get pensions from their home countries, and they genuinely don't realize they have to report it. A lot of immigrants have bank accounts, property, investments back home, and they don't know America requires worldwide income reporting. This rule is designed to close that gap by making the questions impossible to ignore and by creating automatic triggers when something doesn't add up. Now let's talk about how this affects you specifically. If you're a senior who's a U.S. citizen with foreign accounts or foreign pensions, you need to answer these new questions accurately. If you get any pension or Social Security payment from another country, it's income. Report it. If you have bank accounts overseas, even small ones, even if they're inactive, you disclose them. The lower thresholds mean tons of seniors who didn't need Form 8938 before, now do. But if you're a green card holder, listen carefully. Your tax history gets reviewed when you apply for citizenship. USCIS can access IRS records. Under the new data sharing protocols, USCIS now gets automatic flags if a green card holder doesn't answer the foreign account questions, doesn't file required forms, or if their information contradicts FBAR records. It doesn't automatically deny your citizenship, but it absolutely triggers additional scrutiny in your naturalization interview. Any discrepancy gets dug into. If you're a naturalized citizen, you're subject to the same requirements as any other U.S. citizen. But these new mandatory questions apply to you because you weren't born a citizen. The IRS says this isn't discriminatory. It's just recognizing that naturalized citizens statistically have more ongoing financial ties to other countries. And if you're on a work visa, H-1B, L-1, O-1, others, and you file U.S. tax returns, you're covered too. Compliance failures can affect your visa renewal or future green card applications. So what do you do right now? 5 steps. Write these down. First, gather everything. Bank accounts, retirement accounts, life insurance with cash value, investment portfolios, real estate, foreign business ownership, doesn't matter how small. Write down the institution name, the country, the account number, the maximum value during the year. Second, figure out if you need to file an FBAR this year. Remember, it's required if your total foreign accounts hit $10,000 at any point. Deadline is April 15th. Automatic extension to October 15th. If you never filed an FBAR but should have, talk to a tax professional about the IRS streamlined filing compliance procedures. They can help you come into compliance with reduced penalties instead of getting hammered. Third, check the new Form 8938 thresholds. If your foreign assets will exceed $25,000 at year-end or $40,000 at any point, start gathering documentation now. Form 8938 requires detailed information about each account and asset. Fourth, if you receive any pension, Social Security, or government payment from another country, make sure you're reporting it correctly on your U.S. return. Most countries have tax treaties with America that affect how that income is taxed. You might qualify for credits or exclusions. A qualified tax professional can walk you through this. Fifth, especially if you're a green card holder or applying for citizenship, keep copies of everything. All your tax returns, FBARs, Form 8938s. Organize them. You'll need them during your naturalization interview, and having clean records makes the whole process smoother. Let me give you a real example of why this matters. I worked with a 68-year-old green card holder named Mrs. Patel from India. She'd been here 22 years, applied for citizenship last year. During her naturalization interview, USCIS asked about foreign accounts. Mrs. Patel had a small bank account back in India with about $15,000, emergency money for visiting family. She never filed an FBAR because she didn't know she had to. Under the old system, this might have slipped through. But USCIS cross-references IRS records way more aggressively now, so the officer caught it. Mrs. Patel's citizenship application got delayed 8 months. She had to hire a tax professional, file back FBARs, prove her failure wasn't willful. She eventually got approved, but the stress and the expense were brutal. Under the new 2026 rule, Mrs. Patel would have been asked directly on her 1040 about foreign accounts. She'd have known immediately that reporting was required. The rule is stricter, but it's also clearer if you follow it. Now, let me address something seniors ask me constantly. What about Social Security benefits? The new rule doesn't change how U.S. Social Security is taxed. If you're getting Social Security, up to 85% might be taxable depending on your total income. What the rule does affect is foreign Social Security or pensions. If you get payments from another country's social insurance system, that's generally taxable in America unless a tax treaty says otherwise. The mandatory questions on your 1040 ask you specifically about these payments, so report them accurately. Another question I hear, what are the penalties if you don't comply? They're serious. Failure to file an FBAR hits you with penalties up to $10,000 per account per year for non-willful violations. Willful violations? Greater of $100,000 or 50% of the account balance. Failure to file Form 8938 is a $10,000 penalty, with additional penalties up to $50,000 for continued non-compliance after the IRS sends you notice. Beyond the money, non-compliance extends the statute of limitations. The IRS can audit you longer, and it creates serious complications for immigration applications. Here's what I need you to hear. This rule isn't designed to punish you. It's designed to level the playing field, so everyone follows the same rules and the tax system is fair. If you've been unintentionally non-compliant in the past, There are programs to help you come into compliance without getting destroyed by penalties. The key is to act now, before this rule is in full effect, so you're prepared and protected. Everything I've shared today is for informational purposes. It's not legal or tax advice. Tax law and immigration policy are complex and they change. Your situation might have unique factors that need professional guidance. Talk to a qualified tax professional or immigration attorney about your specific circumstances. Always verify information with official government sources, the IRS website, USCIS. Policy changes. What I'm telling you is accurate as of right now. You've worked too hard to let a tax rule you didn't know about create problems for you. Stay informed. Get professional help if you need it. And you're going to be fine. I'm Henry Charles with US News 24. Make sure you're subscribed with notifications on because I track every development in tax and immigration policy, and you'll hear it here first. Thanks for watching. Stay safe, stay informed, and I'll see you in the next video.